Hello and welcome to today's Market Monitor. Today we're going to be looking at nationwide sales stats for the past year and answer a couple questions. Those being, have we seen the bottom of the housing market price-wise? Have we seen the peak of interest rate hikes last year? And where are the housing market and statistics headed for the rest of 2023? If you haven't already, please click the subscribe button below and find me on Instagram at Bryce Says, and on Facebook as Brian McCarthy Realtor. I do post things weekly and even daily there with statistics, real estate news, and things to keep you informed about the market here locally around North Jersey, hyper locally in Hoboken, and as well as just nationwide stats as well. Those are always good for anyone you own property, looking to buy property, or just have some water cooler knowledge. So I'm always happy to be a resource. Reach out to me anytime. Please do follow me wherever you are on social media. I'm your host, as always, Brian at Compass in Hoboken. Today is February 3rd, Friday. I'm coming at you live from downtown Hoboken. Let's check out what's going on nationwide today, shall we? Always like my quotes here from the smartest people in the business. This is from Mark Fleming, chief economist at First American. He says, two dynamics are keeping existing home inventory historically low: rate-locked existing homeowners and the fear of not finding something else to buy. As we get into this and a few more of these slides, you'll see a lot of people have homes, either bought homes when interest rates were super low, around 3%, even a little bit less, or if you own a home already, a lot of people refinanced. So that the increase over the past year of the interest rate has kept a lot of people that might otherwise have bought if spending power and borrowing power were the same as they were when they purchased. They're actually staying in their houses now because, you know, if they're looking to trade up or looking to trade down, your expenses might be a little bit more. So that is a factor, maybe not the most important one, but one that people are definitely taking into consideration when they consider moving from their homes now and keeping a lot of people staying put. So Mark Fleming kind of nailed that right now on rate lock of existing homeowners not being able to find something that is still affordable for them as they look to buy something else. So average annual inventory of home for sale, and this is, again, nationwide, but take a look at this. I mean, the biggest glut of inventory was right around the financial crisis, 2007, 2008, 2009. And then things have been slowly, if you can even say slowly, getting absorbed year after year, and inventory has just been dropping and dropping ever since. Last year, 2022, was up slightly than 2021, but still not anywhere close to the pre-pandemic levels here between about 2012 and even 2020. Months of inventory for sale. This is a good stat to look at, again, nationwide over the last 12 months. So starting in January of 2022, inventory has actually been creeping up. And this is not because homes are actually, or new homes, new builds, new construction are coming on the market. It's because, at least nationwide, maybe not necessarily in North Jersey, houses maybe came on that are asking a little bit too much money and just continue to stay on the market as they roll into a new month. So it's more of existing homes for sale that are staying on. And again, this is nationwide, not really necessarily our hyper local market, but just nationwide, looking at all of the markets combined. There is quite a bit of inventory that is, as we say, sitting on the market. So if you're a buyer or you've been looking maybe at the end of last year, maybe halfway through the year, and you were just priced out of the market, might be time to get back in, especially as your rent has been increasing. Might be time to get back in the market. This is probably going to be one of the last months or the last quarters where you can actually find a home, especially in our area, that might be a little bit overpriced, maybe has been ticking up on days on market, and looking for a buyer and just hasn't had maybe any offers. I see this pretty often when homes come on the market, maybe reaching a little bit too high for a price point, pushing that boundary. Because a lot of buyers come on and a lot of sellers come on and think, well, maybe we'll price a little bit high and we have the chance to negotiate down. But what I see most often in those situations are they're not even getting the offers. So if you're a home buyer in one of those markets, definitely take a look, maybe even have your realtor sort by days on market and start looking there. You might be able to find something that you thought maybe wasn't in your budget, but might possibly be because those homes simply are not getting the offers that they're looking for, that at this point would be less than what they're asking, and you have an opportunity to negotiate. And again, this might be the last opportunity that you have to do this for a while as interest rates are coming down. So active listings are greater than new listings. This is basically just reinforcing that point that I just made, where new listings, either it's new construction or something coming on new in the market, even if it's a resale. After May, since June, those have been dropping. Again, this is nationwide. So like new listings come on at less of a rate than other properties that have been on the market from the month before are hanging on the market. New listings now below previous years. So new monthly listing counts in thousands. Broke this slide up into two different viewpoints here. So this is 2022, last year, when it ended in June. And this was a big reason why the headlines that didn't really pan out were saying that, we're going to see this huge rise in inventory. Interest rates are going to go up and the bottom is going to fall out on home prices nationwide because we're just going to have too much inventory. Because if you look at this big red line, you would imagine that it keeps going up this way, right? Well, in reality, when those interest rates started climbing and people were staying put, the inventory took a nosedive, and we ended in December, just barely 2 months ago, at 21% less listings nationwide than we've seen even in the previous year. 239,000 new listings or listings on the market at the end of the year 2022. So this is a huge reason, just a big lack in supply, even though demand went down as well. A big lack in supply is going to keep upward pressure on the prices of those houses that are still on. Number of homes for sale has increased, but still below pre-pandemic levels. So this is just another chart looking at what we looked at a few slides ago. So active monthly listing counts over the last 7 Decembers. So since 2016, where we ended at 1.2 million, that has just been decreasing, except for 2020 or 2018, down to 2022. So when we ended here at the end of the year, we were, 1.5 times where we were at in 2021. But if we go pre-pandemic, so like these 4 years here, 2016 through 2019, we are not even close. We're all barely over half of the active monthly listings where we were pre-pandemic levels. So inventory is still quite low. Couple more quotes here, because I think other people maybe say this more succinctly than I do. Odesha Kushi, chief economist at First American, said, "The housing market remains fundamentally underbuilt. As demand rises, it will be important to boost supply in order for price growth to continue to adjust to more sustainable levels. While builders can't make existing homeowners move, they can add new homes to the stock." So I want to add some quantitative data here nationwide to kind of add some substance to this quote. Last year, 4.7 million individual homes closed for the year. 3.8 million individual homes sold in 2012. So if you go back to basically the year after the housing crisis started to normalize, there were just under 4 million home sales nationwide in 2012. 10 years later, that ticked up a little bit to 4.7 million. But if you consider there are 133 million homes in the United States as individual units, we're at barely over 1% of the number of homes that have traded last year as compared to the number of homes that people own, that there is just existing in the United States. 39% of all homes in the US do not even have a mortgage. So some people either paid for those cash or paid it off since they bought it. So that's almost 40%. And 65% of people's loans, people that have loans in the United States that own those 133 million houses, are loans below 3.5 interest rate. Again, making it very difficult for people to kind of justify moving if they don't absolutely have to. And the last data point that really correlates to this is economists estimate that we are roughly 6 million units behind in demand nationwide for the amount of buyers that are out there compared to how many listings are for sale nationwide. We are 6 million units behind in demand. If you consider that's way less than the 4.7 million units that sold during the entire year, we are indeed quite a bit behind, which is keeping that upward pressure on housing prices. So as Robert Reffkin said last week, if you caught it on CNBC, I posted that on my Instagram profile. Please check me out and follow me there. I posted kind of the intro to that video, and you can find it in my link there. But he was on Closing Bell on CNBC talking about 6 reasons and data points that show why, you know, the bottom of the market, so to speak, or the lowest home prices that we saw nationwide in the cities that were really losing value, really kind of bottomed out around September, October, November, like, you know, end of Q3 last year, and have been rising ever since. So Bank of America put out a statement last month that said, we believe underbuilding over the last decade has absorbed 2 to 3 million home glut from pre-financial crisis overbuilding and created a deficit of 4 million homes. So Bank of America there is estimating we're behind by 4 million. Some of the other data I'm seeing is behind by 6 million, but either way you round it out, we are below inventory by quite a bit. So here are a few of these sources here estimating what we are behind. So housing market short in millions of homes, number of homes each company forecasts the market being short. So Realtor.com was saying 5.24 million, and this goes down. Bank of America we're behind by 4 million, Freddie Mac 3.8, Morgan Stanley 2, all the way down to Moody's Analytics at the least at 1.6 million. So everyone pretty much agrees that supply is way underserving the demand that we have in this country right now for home inventory. So what are the takeaways from today's data here in our market monitors? It's basically twofold. Let's look at it from both sides. If you are a seller in today's market, or you're about to be, it is very important that you price your home correctly, especially here in North Jersey and literally anywhere you are in the country. We aren't where we were a couple of years ago, where demand was so high and interest rates were so low that prices were appreciating at double digits. And we don't really want to be there anymore. I mean, if you think about it, it's very unsustainable. And I keep saying this every week, every month that I'm on here with you guys, but it really is. We need kind of a more stable market. And that's where we are approaching right now. But if you are a seller, it's very important that you price your home appropriately. The things that are selling and selling quickly are priced appropriately. So that basically means you put it on the market for the market price, or maybe even a little bit less. And there are strategies around that. I'd be happy to talk with you individually about the benefits and the risks for each scenario. But the takeaway there is pricing your home correctly is super important. And the flip side of that is, if you're a buyer, you know, you need to be prepared to get on the market, which basically means create a relationship with a dependable buyer's agent that you like, that knows what you're looking for and can help you search for the things that may not be directly in front of your radar. Us realtors, or anyone who acknowledges the market now, knows that we are in a very consumer-centric marketplace. I mean, everyone has Zillow or the Compass app on their phone. You know when things are coming up. But if you have a smart realtor that can help you look in unconventional ways, one of which I mentioned before, but maybe you feel like you're priced out of an area, well, there is certainly, depending on where you are, a decent amount of inventory that maybe has been sitting for a while. So if you can touch base with your realtor, I'm happy to do this for you as well. Maybe you start looking at things that have been on market for maybe double the local average. So let's say the local average around here in Hoboken is like 30 days or less. I mean, there's certainly inventory here that isn't selling as well, that's probably priced too high. So maybe we look at things that have been on for 60 days or more, and we look at those things first because they are ripe for a negotiation, a lower sales price, and you can lock in a fantastic house that either needs some work, or you're able to negotiate a better price, or maybe you can get a seller concession to help with either those fixes or to buy your interest rate down. And then you walk away with a home that you, A, can afford, and B, you have that possibility of, as interest rates continue to drop, as we hopefully will see here in the next couple of months and next couple of years, you can always have that opportunity to refinance and make that home even more affordable for yourself. So positive data that is keeping mortgage rates falling since the peak, and as we continue to follow this, are every time there's a new report out that inflation is further being brought under control and jobs are being added to our economy, those are all very good for mortgage rates. So they will improve, but as they improve, keep in mind that more buyers are going to jump back in the market, and in any area that has a serious supply problem, it's going to make those prices go up even higher. So they might be right now at their most affordable point that they have been over the past several months. And if you're just now getting in the market, you're considering to do that, rush, don't run, or rush, don't walk. Get into the market now while prices are still relatively predictable, and you can get a decent interest rate before the competition just keeps doubling itself. As always, I'm Brian McCarthy. I really appreciate you guys being here. Please subscribe so you get these videos. Find me on social media so that I can stay connected, and reach out to me with any questions you have. Drop a comment below, DM me on Instagram or Facebook, or just give me a call. I'm always happy to discuss wherever you're at in your search, any questions you have. I always have data to back it up. And I look forward to connecting with each and every one of you next time. Thanks so much, guys. Take care.